Hello guys, welcome back to a new video, and in today's video I want to give you guys a usual market update. We're going to take a look at the dollar index as well as the Nasdaq, the gold, and the Dow Jones there as well. If you're new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the video, please consider smashing that subscribe button for the YouTube algorithm there as well. Now, without any further ado, the first thing I do want to bring to you guys' attention is just be very careful of this account. This is not my account. Somebody is this account is commenting on people's comments on the videos that I make, saying that you need to DM him. Please do not get in contact with this person. This is not me at all. I would never ask you to DM me. All my information is in the description of this video below, strictly via email. Now that we got that out of the way, my good friends, the first thing that we are going to take a look at today is that if we go back to the pandemic era, right, we saw that the Feds cut interest rates lower nearly to zero, and that was basically because of the severe economical impact that it was going to have back then while people were losing their jobs. Now fast forward, now that the interest rates was cut to nearly zero and consumers were spending left, right and center because they could get things for a much lower price. However, the Feds, we've learned now that the Feds has hiked interest rates for more than 4 times at 0.75. However, last week Wednesday, Powell came out and he said that we could potentially see a 0.50 basis point hike due to the fact that the CPI, which is the inflation indicator, had come down. Today we learned that CNBC reports that Wall Street now worries that the Fed could hike interest rates higher. It says here that recent economic data has painted a mixed picture of the US economy, prompting some investors to believe that the interest rates will need to stay elevated for as long as the Federal Reserve battles persistently high inflation. Now, if you've been here, if you've watched the most previous video that I did, you would know that how inflation is calculated. Basically, what we look at is we look at CPI numbers, which is a consumer spending index. As this increases, this indicator tells us that inflation increases in value, and with this means that the Feds are more likely to increase interest rates, thus leading to a higher dollar, and every pair that's negatively correlated, like an indice or the stock market, a precious metal or a commodity, then tends to move in the opposite direction. So with this data kept in mind, now that we've got new news that Jerome Powell, the Federal Reserve, could potentially hike interest rates at another 0.75 at the next December meeting on the 14th. We're going to use that data and we're going to do a technical analysis. Firstly, the dollar index had fell tremendously, if we remember, based off the last breakdown that I did over there, where the market broke below support, came back, tested it as a resistance. The market took a massive dip to the downside and finally found support at this previous level of resistance that got broken, which is now acting as a level of support. The market had also printed a massive impulse, and after an impulse we got the correction. And if we take our Fibonacci from the low to the high of this massive impulse, now we can see how the market is currently testing the 78.6, which is the last bit of hope that the dollar index has before it moves lower. Here on the weekly time frame, we can see the market is once again faced with important structure, but the dollar index is also faced with that structure. The market year over year had broken below support, back to test it as resistance, broke above resistance, testing it as support. So do have a market now that's stuck between support and resistance, price action. Next up, here on the daily time frame. Now here on the daily time frame, this level over here was a very important key level that I was basically monitoring. Now you can see here, this is a level of support. The market tends to do this. The market tends to dip lower before going higher. This is a good example of what happens is we saw that dip to the downside because why this level of support acted as an entry position for retail traders. And this is normally where a retail trader would get in. The market then broke above this previous level of resistance, came back, retested it, and we can see we had that multiple wick rejections, and we do expect the dollar index to increase in value. Now, the reason why I say this is that I do expect a pullback on the index. Let's see if we take the Fibonacci from the it's on the monthly time frame. Here we go. So if you take the Fibonacci from the high to the low of the impulse, I do expect a pullback or a correction on the index to at least a 0.382 before any continuous moves to the downside. So I do expect the index to increase in value to that level. Now, as a retail trader, the best place to obviously look for buying opportunity is at support. If you remember, now this level over here is acting as a level of resistance. Now we're going to wait for clear break above resistance. That resistance would be then turn support, and then on the retest you can definitely start looking for buying opportunities for the market to go and test the 0.32 as we identified from a monthly perspective. Next up, we've got the Nasdaq 100. If you remember the breakdown that I did on Sunday, anticipating this move to the downside. Now, the Nasdaq had found support. Now, we can obviously see here that the market found support at that level, but we can also see that the market had broken right through this very important level over here. This level over here acted as resistance. The market broke above that, tested it as support, went up, broke below support, and is now back to testing it as resistance, giving us the same confluence that we have as a dollar index. So the best way to approach this is obviously to wait for a deeper pullback, and then on the retest you can definitely start looking for selling opportunities to the downside there as well. Next up, we do have gold. Now gold over here on the monthly time frame massively rejecting this level of support that is acting as a resistance, a massive impulse. So after an impulse you expect a correction. If you take your Fibonacci from the high to the low, you can see we had a 50% pullback of the first massive impulse, which is 50% retracement of the massive impulse that we had over there as well. If you drop down on the weekly time frame, what do we have? Now, from a weekly perspective, we can see the market had printed this W formation. After a W formation, you expect to pull back to the neckline, and we had not seen the market pull back to the neckline yet, so we can still expect a deeper retracement there as well. On the daily time frame, what is it that we have? Now, from a daily perspective, it is clear that firstly, the market had tested and rejected this level. Now, based off a technical perspective, we have this impulse. After an impulse, we expect a correction. Now, if you take your Fibonacci from the high to the low, we can see again we had a 50% pullback, and if you look left, you'll see this 50% is lining up perfectly for that structural level there as well. Now, the best way I would say to approach the situation on here is obviously to wait for the market to break below this level. Why? Because this level over here is acting as a level of resistance. The market broke above that, tested as support did not hold, broken above that resistance. And the same as I said now before with the Nasdaq 100, the market tends to do a fake out. So I would wait for a break below this level on the retest, start looking for that sorting opportunities to the downside for the market to go and complete a W formation as we identified from a weekly perspective. The Dow Jones here on the daily time frame also currently trading at very strong bearish territory, as we can see over here. As we can see, this market had printed resistance, broken above that, tested it as support held, market broke below support, and is back once again to test it as the resistance there as well. Now, the best way I would approach this is obviously to wait for a deeper correction into that area over there, and then potentially start looking for sorting opportunities to the downside there as well. Now, my good friends, that is it from my side. Thank you for your time. Please watch out for these impersonators. And as always, cheers for yes.